Hello and welcome to the Cryptocurrency News Channel. We're going to talk about how a CIO says 1 trillion is a conservative cap for Bitcoin. And I don't know about this bull run, but I think a trillion dollars can be reached. I don't think it's quite that conservative, at least not for this cycle, because a trillion is 2.5 times, or really about 50,000, a little more than $50,000 for Bitcoin. And I'm not really sure if we're going to hit it this cycle, but eventually, of course, we will actually hit it. He makes some arguments, but he does leave some things out. So he believes it could happen if mainstream companies put a mere 1% of their holdings into the market. I still think that is a little bit far away. Remember, Fidelity said, one of the guys from Fidelity said you should put 5% in the market. However, Fidelity has not done so, and that was just an opinion. So Bitcoin has recently seen ample interest from a number of mainstream companies and persons, such as billionaire hedge fund funder Paul Tudor Jones. And Paul Tudor Jones has actually put some of his money in Bitcoin. This could be the beginning of a new wave of Bitcoin buyers, according to Brian Estes, Chief Investment Officer and Managing Partner at Off the Chain Capital, an investment firm focused on blockchain and digital assets. I think eventually all corporate treasuries will have a small amount of their reserves in Bitcoin, Estes told Cointelegraph in an interview. Perhaps, but that is still probably 5 years away. A growing number of companies are looking to Bitcoin as part of their treasury and fund equation. Two of the latest entrants to the Bitcoin ecosystem, MicroStrategy and Square, recently bought approximately 425 million and 50 million worth of BTC respectively. And that's nothing compared to what Grayscale has bought. Those are two of the Fortune 1000 companies, and I think there's 998 left to go. Yeah, I mean, like, those are obviously two of the early entrants. A lot of the Fortune 1000 companies obviously have nothing to do with like money transfer or digital currency. I think most of them will wait several years to actually get on. Collaborating with a number of its partners, the off the chain crunched a few numbers based on hypothetical scenarios, matching each company's presumed investment capability with possible Bitcoin purchases. There's 4 trillion of treasury reserves at public corporations today, ST said. Just 1% of that moves into Bitcoin, that's $40 billion. He's obviously looking at the multiplier effect, but that actually has a caveat. The multiplier effect for every dollar goes into Bitcoin, Bitcoin goes up somewhere between $20 and $100 in market cap, he explained. There's 1 million in Bitcoin bought, the market cap of Bitcoin goes up between 20 and 100 million. Now, but there's a caveat to that, like I said. That's only true if they straight buy and they don't dump. The thing is, if there's like $1 billion worth of flow of Bitcoin and there's a million plus 1 million net, it doesn't go up by that much, because when you have like some buy, some sell, some buy, some sells, it's kind of like more dispersed through that entire area. You need like 1 million Bitcoin bought in a short amount of time to actually go up 20 to 100 million. The thing is, like, if you stretch it out over a long period of time and there's like buys and sells, the effect is nowhere near as dramatic. And I'm not really sure about that 100 multiplier. I think it's probably around 20, if not a little less. This multiplier effect relates to the availability of funds on order books across crypto exchanges, according to Fundstrat senior research analyst and director David Gridler. Reason you get this effect is, as in all markets, it's the marginal liquidity at the edges that sets the price and value for the entire asset base, Gridler told Cointelegraph. On the low end of the spectrum, multiplying the 40 billion by 20 would boost Bitcoin's market cap by 800 billion, which if you add it to the 200 billion right now would make a trillion. But like I said, the multiplier effect has kind of a caveat. It has to be basically straight buy, not really net over a much larger transaction volume. Because we've seen net over much larger transaction volume and it doesn't really do all that much. So there's definitely a pinch of salt to be added to that. And that's why, like, in bull runs, it aims to shoot up so much and then it dumps straight down, because a lot of those tend to be straight buys and straight sells. But over like the longer term, it's like net over a much larger volume, which is why it doesn't tend to actually go up that quickly. Now, overall, I think like 1 trillion will actually come. Not sure if it'll come in the next 2 years, but if you take a look at the next 5-10 years, I do think 1 trillion in Bitcoin alone, which is 2.5 times the last high, will actually come. Just not sure if it'll actually come within the next 2 or 3 years. I mean, I do expect Bitcoin to go up to 50, 60,000, and of course all the alts to follow at the next peak. But it could just go to 20, like it could go to 30, 40,000 and drop back down. No one really knows. There's a lot of corporate investment, but like I said, only 2 of the Fortune 1000 have actually really come in, and I'm not really sure when the rest of the Fortune 1000 is going to come in. It's going to trickle in very slowly, so it might take several years to do so. So that is the news for today. Let me know what you think, like and subscribe, and hit that bell notifications button. Thank you and have a nice day.